A very good morning, one and all, my dear students and my council colleague. And the name is sufficient, Sanjeev Singhal. And we have two faculties with us, Shubham Ketan. First, I should appreciate Shubham for joining us for the second part again. And now we have with us one more speaker, Vinay Gandhi. And let me first of all thank all the team of BOS because even on Sundays, putting aside their personal works, people are really taking it part to make sure that the session is organized. It is you students who have motivated us because the number of participants and the kind of feedback what we got, that itself is an energy for us to organize and take it forward. A very good morning to one and all. So today's session, name itself GST refund. You know that all the clients, whenever it comes to a refund, are more cautious and a lot of questions will be there. So I'm sure with our well-known speakers today, all the practical training required with regard to the GST refunds are taken care. Sir, let me share. The 14th practical training we are conducting on a week-on-week basis, covering GST, income tax, and MCA portal affairs. Sir. Because all the students, as you know that the technology is undergoing a drastic change, it is our time to make sure that we are time to time updated. So BBO has thought, in addition to the theoretical training, what you are getting, and the practical exposure, what you are getting at the articleship, if the web-based learning is given to a student, that will put them up to date with all the information. So with that intention, the council has decided to organize the live web practical classes. And we have started off with the series. And today is the 14th week of it. It is the students which have shown that enthusiasm. The number of people watching this session has crossed even 10,000 mark. And the number is keep on increasing. I should really appreciate the entire team of BOS, the council for really giving us guidance, and the faculties, because that is one Sunday every professional gets. In spite of that, their passion and commitment towards institution and student is what actually made this session successful. So today, we have one person whose name itself is sufficient. With me, my colleague senior colleague in the council, Sanjeev Singhal, sir. If at all I have to tell about him, probably in addition to the GST, I have to take one session. That itself is his profile. So I'll try to cut short and make it simple. Sanjeev Singhal, sir, is the chairman for the two main committees, Audit and Assurance Standard Board and Sustainability Reporting Standard Board. Sanjay Singhal, sir, has a wide and vast experience, both from industry and practice point of view. Currently, he is a partner in SR Batley Boy and Co. and being serving in the institute for so many years. So he's a topper from the Delhi University. His knowledge, its time and commitment to ICI is really a motivation to all of us, and we really get inspired, sir. Sir, thank you for being part of this session. We request you to kindly have your words and the knowledge with the students. Thank you very much, sir.
Thank you very much, Sridhar, my learned council colleague. The speakers of the day, Vinay Gandhiji, Shubham, Ketan, the entire Board of Studies team, and my dear participants. It's indeed a pleasure to be with all of you this morning on a virtual mode. And this was a dream, which we have seen last year when I have said that to the then president, C. Nihar Jambu Sariyali, let us start Sunday Ki Pathshala. So a practical training program, which is given every week, say for about 100 weeks. And we made a tentative program also. Honestly, when I got to know on 3rd of this month, when I was in Kolkata, from the chairman of this board, Sushil Goyalji, that this has been implemented. And he says, take one session as a keynote. I said, I'll be delighted to. Because what we see in the articleship, if someone is doing articleship with me, he will be exposed maybe only for audit. Maybe someone is doing articleship with Shubham or Sridhar, they may be exposed to tax. It is very difficult to get an exposure in all the aspects. So this acts as a bridge between that practical training which we do as an intern during internship and what is required. And this will help our members also, because they will be able to get quality articles. This will help all of you, because you will be able to sharpen your skills. And let me tell you, who could be a better person than Sridhar, who is so deep into academics. And I've seen his fiery arguments. The way he argues in the council, the way he puts forth his point of view, I'm his fan. And it's not that because he's in front of me. I've told many people, many of my council colleagues, the debating skills of Sridhar are, uh, uh, I'll say this is a priceless asset for the council. And I'm sure that Sridhar will go a long way. And one day he will be the leader of the profession as the president of the institute. I really admire him, and this initiative is really good. So whether it is GST or direct tax or MCA portal, and maybe in future this board will also add transfer pricing, accounting standards, Indias, and also the non-corporate entities, the listed entities audit, etc. There's so many things which can be added, and these will be gradually imparted to the student in the first year of articleship, whatever is relevant for them, then going up a level above in the second year of internship, then one level above in the third year of internship. So this will really benefit you for your articleship, for your exam, and later on to get a good job. I mean, today job is not a problem. We know all of you. I mean, we know that. But what you get, you can get 10 lakh rupees per annum to start with. You can also get 40 lakh rupees. It depends upon how good your articleship is, how good your knowledge is. And if you want to do your practice, again, it is going to help you. So please focus on this. And this number of 10,000 students who are attending this live is really encouraging. And we would wish that this one more zero is added to it. It goes past 1 lakh. And that is possible. Same thing has happened with the BOS academic classes also. And I'm sure that this will happen here also. And of course, GST has become a very, very important field. 1,40,000 crore rupees of revenue in July speaks voluminous about the potential. And one day it may happen that GST will cross direct taxes revenue. So the importance of this subject is known to all of us. And GST refund, yes, GST refund is very, very important. Say, for example, if it's an exporter, it helps in their working capital. For others also, actually GST refund, if we can get it quickly, if you can get it fairly, then there lies the key for your client. So my congratulations to the board for this amazing effort, and my best wishes to all of you as a students. And I really look forward that this will be this yet another difference between our profession and the other profession. Because this practical training will be of immense value. And thanks to Sridhar and thanks to Sushil Goyalji for extending an invitation to me for interacting with all of you. Thank you, and back to you, Sridhar.
Thank you, sir. Thank you very much for your wonderful word. Dear student, let me share, because we all know it is not about ourselves and growth. It is all about thinking to the society. If at all I have to add that word, then I should say about CA Parivar, what Sanjeev sir runs and support for the students in need, especially CA Parivar, their contribution during the COVID period. Sir, really amazing, sir. It has inspired all of us, and many students who got benefited out of it. I'm sure it is a lot of value addition. So any students who are in need or support, so Sanjeev sir and CA Parivar is always there. You can log in and get into that. So thanks, sir, for taking out your time and having such wonderful work.
Sridhar, since you mentioned CA Parivar and 10,000 students are here, so let me tell to all the students, friends, today we are supporting 126 students for their end-to-end CA education. And we have a Super 30 hostel also in Delhi. If there is any needy students who wants to do CA and is meritorious also, please refer them to us. We will bear, and with the recommendation of any chartered accountant in India, we'll bear the full cost of education of CA, the fee payable to the institute, the books, and communication skills classes, etc. We'll pay them a higher stipend also in Delhi. And if they need a hostel, we'll take care of their hostel facilities as well. So we are really looking forward to such meritorious and needy students. If you have, please reach out to me. Thank you.
Thank you, sir. That's so nice of you. And I'm sure that students who are in need will be benefited. So now that we'll go into the topic, Ginny, request you to kindly take it over.
Yes, sir. Thank you, Sanjeev ji, and thank you, Mopala sir ji. Welcome you all for joining us on the session. It's for the GST refund part 2. Today we have with us Mr. Shubham Khaitan ji. He's a chartered accountant and the company secretary also, and he is a CFA from USA. He has done diploma in information system audit. He is also an LLB. So he has been author of many books on a practical training guide to GST and made significant contribution to the book's background material on GST. He has drafted many GST amendments booklet.
Yeah. Shubham, thanks for being a part of, I think, in the 14 weeks, this is the second time you have come out. That shows your love and affection for the student. So I'm sure the student, last time the feedback was so amazing. Many students turned out and gave a wonderful feedback. I'm sure this series also students get benefited out of it. Yeah, Ginny.
Yes, sir. Good morning, everybody. I thank you, CA Sanjeev Singhal ji, for taking out time and joining us, and CA Mupala ji, our Vice Chairman of Board of Studies Operations. I welcome our Shubham Khaitan ji. He is a Chartered Accountant and Company Secretary. He has done his CFA from USA and a diploma holder of Information System Audit, DISA, sorry, and LLB. And we also have our another speaker. He's Mr. Vinay Gandhi ji. He's a CFA and done CICA from DCA and CPF Australia. We welcome all of you and taking the session on GST refunds part 2. To Shubham ji.
Yeah, thank you, Shubham. Thank you, Vinay. So now I don't take much time. We'll give it to you. So let the students have it. And please, in the chat box, students also requested. If at all you have any queries, please bring in the chat box. The faculties will get them. Thank you very much. Over to Shubham.
Thank you so much, Sridhar sir. I think, and I must say that Board of Studies, both Sushil sir and Sridhar sir have been doing a wonderful job in terms of the number of activities being carried out by the Board of Studies. Some of them I have been apprised of. So congratulations to them. And I am personally very privileged to have got a second opportunity to interact with so many students all across the country, who are very bright people. I'm sure in their careers they would be prospering. So I'm hopeful that with these learning sessions, this would aid them in making sure that their career gets progressed in different fields, because every time we are taking a different field under GST, income tax, audit. And as Sanjeev sir was mentioning, it is very important for students to learn all the fields, because usually in articleship, they may not get exposure of all the fields at one go. So to have a practical learning from people who are specializing in a particular field is always beneficial for students. So I'm sure this session, we are trying to make it as practical as possible, because there are a lot of things in the GST refund process which you might have read in the books, which may not have a lot of practical relevance, and whatever is relevant practically may not always be there in the books, right? So it is what we need to remember is GST refund is perhaps one area where we can value add most to the clients, because this is one area where the client becomes most happy seeing money come from the chartered accountant, because the CA helps him get the his money in the bank account, which is accrued to him from the government, which is otherwise a cumbersome process, to be honest, because GST refund is something wherein there have been a lot of frauds all across the country, as a result of which the government has made the measures for GST refund process very stringent, which is absolutely necessary also. But at the same time, it requires help of professionals like us as chartered accountants, as persons who are helping those chartered accountants in making sure that these refund process is in a smooth manner, right? Because there are a lot of documents, a lot of information which is now required to be maintained in a way which department understands. So we are going to discuss about that. And since we have discussed refunds part 1 already last week, I believe, wherein there have been a discussion regarding the basics and the processes regarding refund. So we'll try to keep our discussion onto the issues that we are facing practically, and the kind of notices that we get, what kind of replies we give onto that. And perhaps one of the most important topics which anyone should understand is import and export, because I believe import and export is one area where very few people have knowledge, and which I think is one of the most lucrative area for chartered accountants, because of the a number of complexities involved in the subject, and the concept which is involved in it, right? So what constitutes export, what is to be considered as import, and if something is out, what is outside India, and where the place of supply is within India, all these things we'll discuss, right? So let me straight away share my presentation here now with all of you. So this is refunds part 2 that we are discussing today. So first we'll be discussing about import and export, right? So what is the meaning of import of goods? Supply of goods imported into the territory of India. So what is to be considered as import? If any goods are imported into the territory of India till they cross the custom frontiers, then it would be treated as supply of goods in the course of interstate trade or commerce. So if anything crosses into the custom frontiers of India and till they cross the custom frontiers, if any goods are sold, they are not regarded as import, right? So let's say I am sitting in India, I am sitting in, let's say, Delhi, right? I was importing goods from Delhi, I was importing goods, let's say, from Australia. I am in Delhi, I was importing goods from Australia. Now, before the goods cross the custom frontiers, I sell off those goods from Delhi to a person who is in Maharashtra, right? So I sell the goods from Delhi to Maharashtra, but the goods have yet not crossed the custom frontiers. Mind you, this supply of goods, wherein the goods have not crossed the custom frontiers, before that itself it has been sold from Delhi to Maharashtra, but the goods are still not in the custom territories of India. In that case, it is not regarded as import of goods, right? What is regarded as import of goods? Only and only if I am the one who is filing the bill of entry. I am the one who is filing the bill of entry for showing that, okay, I am the one who is importing the goods. Now, from Delhi to Maharashtra, in my example, the goods, when it had been sold, at that time, the goods had not crossed the custom frontiers. But when the Maharashtra person wants those goods in India, he has to file the bill of entry before the customs officers. So bill of entry is basically for making sure that the goods are cleared into the territory of India. So when these persons file the bill of entry before the customs authorities, in that case, it is considered as import. So when the Maharashtra person files the bill of entry, for him, it would be regarded as import. And from Delhi to Maharashtra, when the goods are sold, it is not import of goods, right? It will not be regarded as import of goods. Rather, it would be considered merely as a supply which is not taxable. So it is neither a supply of goods nor a supply of services. Similarly, if let's say I am sitting in India, I ask my supplier who is in Australia to directly deliver the goods to New Zealand. So goods are being sold from Australia to New Zealand, whereas I am sitting in India. So goods have never crossed the custom frontiers. Once again, the goods are moving directly from Australia to New Zealand. Since there is no import of goods within India, no tax is going to be levied on this particular transaction, right? So only when the goods are imported, the tax would be levied. And it is treated as supply of goods in the course of interstate trade or commerce. So any goods which are imported would be treated as supply in the course of interstate trade or commerce. That means it would be regarded as an IGST transaction, right? So let's look at the definition of import of goods. Import of goods with its grammatical variations and cognate expression means bringing goods into India from a place outside India. So basically, if I'm getting goods from outside India to within India, it crosses the custom frontiers of India, then only it is a sale transaction and it is an interstate sale transaction, right? Place of supply on import of goods. So if any, when we talk about import of goods, the place of supply is where the location of importer is present. So wherever the importer is present, if I am in Delhi In that case, the import of goods, the location of importer would be Delhi. I need to pay Delhi GST on that. Places I need to pay GST Delhi. Now, next, supplier is in Denmark, recipient is in Ranchi. Custom frontiers are at Kolkata port. Now, when the goods, before the goods are cleared from the Kolkata port, the person in Kolkata sells the person in Ranchi clears the goods from the Kolkata port. This is regarded as import of goods, right? IGST on goods imported into India to be levied and collected in accordance with Section 3 of the Customs Tariff Act. So they are saying, as per the levy section, Section 5, subsection 1, proviso to that says IGST would be levied on goods imported in India in accordance with Section 3 of the Customs Tariff Act. So levy would be in accordance with Section 3 of the Customs Tariff Act. Valuation would also be defined under customs, and it would be at the point when the customs duty are levied. So first, we need to remember levy is as per customs law. So GST levy on IGST levy on import of goods will be defined as per the customs law. The valuation would also be taken as per customs law, right? And the point at which the tax is to be levied would also be defined as per Section 12 of customs law. So any goods which are imported into India would have their valuation, their point of supply, and the levy all taken as per Customs Act, right? So all duties, taxes, cess collected at the time of importation, that is when the import declarations are filed before the customs authorities for customs clearance purposes. So basically all taxes would be collected when the import declarations are filed. So import declaration is basically the bill of entry. As and when the bill of entry is filed before the customs authorities, the taxes would be paid, right? So all taxes would be collected when the import declaration, that is the bill of entry, is filed before the customs authorities. Now, some transactions would neither be regarded as supply of goods nor as supply of services. Supply of goods from a place in the non-taxable territory to another place in the non-taxable territory without such goods entering into the taxable territory. This is the example of this. Person is in Ranchi, supplier is in Denmark, and the recipient is in Italy. The goods are directly getting cleared from Denmark to Italy. So in this case, the person in Ranchi is sitting in Ranchi and clearing the goods from Delhi to Denmark. So goods never come to India. This is again neither supply of goods nor supply of services as per clause number 7. Clause 8A, supply of warehouse goods to any person before clearance for home consumption. So goods are in India in the customs bonded warehouse. So basically customs bonded warehouse means that the goods are sitting in the customs with the custom authorities, and yet not they have yet not been cleared for home consumption, right? So so supply of warehouse goods to any persons before clearance for home consumption is basically before the goods are cleared for home consumption, they are sitting in the custom bonded warehouse. Whereas I sell the goods while the goods are in the customs bonded warehouse. So I don't wait for the clearance of goods before selling off. Rather, while they are in the customs bonded warehouse, I am clearing off those goods. So in those cases, the bill of entry is filed by the person who is clearing the goods. The person who is clearing the goods is filing the bill of entry. In those cases, once again, the recipient of services, or rather the importer of goods, will be the person who has cleared the goods from the warehouse, not the person who has sold the goods before the clearance for home consumption. Next, supply of goods by consignee to any other person by endorsement of documents of title after the goods have been dispatched from the port of origin outside India before home consumption. In this case, the person in Ranchi has ordered the goods from Denmark at 1 lakh rupees. But before he is able to import the goods, he finds a buyer in Allahabad who is ready to take delivery from the Kolkata port. So the person in Ranchi sells the goods to the person in Allahabad, and the person in Allahabad thereafter files the bill of entry and gets the goods cleared. In this case, from the person in Ranchi to the person in Allahabad, it is neither regarded as supply of goods nor a supply of services, right? Next, supplier in Denmark, custom frontier is Kolkata port. Here, before customs clearance, so goods never come to Kolkata port before they are in the, as and when they are in the seas. So Denmark person has sent and the goods are yet now in the seas. In this case, goods being sent from sold by Ranchi to Allahabad before customs clearance is neither supply of goods nor supply of services. Next, supply of services imported into the territory of India. So there is any supply of services which is imported into the territory of India, it would be considered as supply of goods in the course of interstate trade or commerce. Rather, import of service, supply of services in the course of interstate trade or commerce. So here we are talking about situations where the services are being imported from outside India. If I am importing any services from outside India, then it is treated as an interstate supply. And I, as the recipient of services, need to pay taxes under reverse charge mechanism. So whenever I am importing services from outside India, I need to pay taxes under reverse charge mechanism. Now, what is considered as import of services? Import of services means the supply of any service where the supplier of service is outside India, recipient of service is in India, and place of supply is in India. So we are talking about three conditions which need to be satisfied here. That the supplier of service, the person who is providing the service, should be establishment within India. The recipient of service is located within India. So if there is any recipient of service, he is located within India. Third, place of supply is in India. So place of supply is very important. Place of supply is defined as per section 13 of IGST Act as to what is to be regarded as place of supply. And it has been clearly mentioned as per reverse charge notification that supply Hello, is my voice audible?
Yes, sir, we can hear you.
Hello.
Sir, I think your connection is lost. Shubhamji, are you there?
Yeah, I'm there. Can you hear me now?
Yes, we can hear you.
Sir, please continue.
Please, sir.
Okay, I'll just start with the import of services once again because I believe I was speaking and in between it got lost. Yeah. Supply of services imported into the territory of India. So what we are discussing here is whenever there is any supply of services which are imported into the territory of India, it would be considered as supply of services in the course of interstate trade or commerce, right? So import of services means that there are three conditions which I need to satisfy. The supplier of service should be outside India, fair enough. Recipient of service should be within India, okay, and the place of supply is within India, fair enough. So let us say I am wanting to take any services of any professional from outside India for, let's say, international taxation. Now, the supplier of service, which is the professional, is located outside India. I am located within India. Place of supply is the location of recipient for these services. So even place of supply is within India. This would be regarded as import of services. Next, let us say I am an architect. I'll take these examples here. I'm an architect in US, but I am the recipient is in Kolkata. So I am sitting in Kolkata, and the building is to be built at US. Here, the supplier is outside India. Recipient is within India, which is Kolkata, but the place of supply is outside India. Since this is the place of supply is outside India, it would not be regarded as import of services. For it to be regarded as import of services, the place of supply should also be within India. Let us look at the provision which is with regard to import of services under the reverse charge notification. The notification says very clearly, any service supplied by any person who is located in a non-taxable territory to any person other than non-taxable online recipient. So any person located in a non-taxable territory, recipient of service, that means the person is located in the taxable territory. In that case, the recipient of service who in the taxable territory would be regarded as the recipient of services, right? Now, let us say there is a tax consultant in France. He is practicing consultancy for European tax law. Now, I am a recipient in Kolkata. I want consultancy from that tax consultant in France. In such cases, since the supplier is outside India, recipient would be within India. This would be regarded as import of services, right? So this would be regarded as import of services. Next, supplier is located in India. Place of supply is outside India. This would be regarded as supply of goods or services in the course of interstate trade or commerce. So mind you, whenever the supplier is within India and the place of supply is outside India, it may or may not be considered as export. If it is considered as export, fair enough. In that case, it is considered as a zero-rated supply. If it is not export, still it would be considered as a interstate transaction on which IGST is to be levied, right? So here in this case, it has been mentioned that the supplier will be regarded as the person supplying the said goods or services and shall include an agent acting on behalf of such supplier. So it would be the person supplying the said goods or services, and it would be including the agent who is acting on behalf of the supplier. Now, zero-rated supply can be of two types: export of goods or export of services. Or second is supply of goods to a SCZ developer or an SCZ unit. Let's look at export of goods or services. What is to be considered as export of goods? What is to be considered as export of services? So it has been said that export of goods with its grammatical variations and cognate expression means taking goods out of India, taking goods out of India to a place outside India. So from India to outside India, if I'm taking the goods, it is to be regarded as export of goods. Export of services means supply of services when the supplier of service is located in India, recipient is located outside India. The three aspects in the beginning which is relevant. I am the one who is supplying the goods. I should be within India. The person to whom I'm supplying the goods should be outside India. This seems quite logical. place of supply, third condition, very important. The place of supply should also be outside India, right? Fourth, the payment should be received in convertible foreign exchange, very important, or in Indian rupees where permitted by RBI. So normally in all the cases where I'm exporting, I should be receiving the money in convertible foreign exchange in US dollars or in Indian rupees only where it is permitted by RBI. The supplier of service and recipient of services are not merely establishments of a distinct person in accordance with explanation 1 in section 8. So it is being said that they should not be merely branches. It should not happen that I am having one branch in Delhi, another branch in Bangladesh. I am supplying from Delhi to Bangladesh. They are merely branches of each other. So in those cases, it would not be regarded as supply, right? Only when they are branches of a distinct person. In that case, it is not regarded as an export. Export of goods. So export of goods. We are taking this example. There's a jute exporter in Kolkata. He's exporting jute bags to USA, right? And there's a jute dealer in USA. Jute exporter in Kolkata is exporting jute bags. This would be regarded as export of goods. Case 1. What if the recipient was in Delhi and the goods are sent to USA? That means, let's take in this example that the jute exporter is in Kolkata, right? And the recipient on whom I'm raising the bill is actually in Delhi. So I am raising the bill to the person in Delhi, but the goods are actually sent to USA. Do you think it is regarded as export? No. Supplier is in India. That means the Kolkata person is in India. The recipient, which is the person in Delhi, is in India. Since the person who is in Delhi is in India, it would not be considered as export for the jute supplier in Kolkata. Rather, it would be considered as export for the person in Delhi because the person in Delhi would be raising the invoice to the person in USA. So first supply Kolkata to Delhi is not an export. But the second part, which is from Delhi to USA, would be considered as export. What if the recipient was in USA, but the goods are sent to Delhi? So in this case, let's say I am raising the bill to the person in USA, but the goods are sent to Delhi. So I am sending the goods to a person in USA. The recipient is in USA, but the goods are sent to Delhi. In such cases, though the recipient is in USA, that means the supplier is in India. Recipient is outside India. It seems like export, but no. Goods are not moving out of India. There has to be a physical movement of goods out of India. Since here the goods are sent to Delhi, there is no physical movement of goods. That's why this would not be regarded as an export transaction. Please be very careful about this. Here, even though it is an interstate transaction from Kolkata to USA, because the recipient is in USA, I would have to show this as place of supply outside India. But Kolkata person in Kolkata, supplier in Kolkata, place of supply is USA. But since the recipient is in Delhi, in that case, it would not be regarded as an export transaction. Rather, it would be regarded as an interstate transaction for which the place of supply is outside India. Person in Kolkata, IT consultancy services. IT consultancy services is being provided by person in Kolkata to a recipient at Dubai. Case 1, payment received in USD. So payment received in USD, payment received in INR. Payment received in USD is where it would be regarded as export of services. So payment received in USD is where it is regarded as export of services. So supplier is in Kolkata, recipient is in Dubai. If payment is received in USD, then only it is regarded as export. Why? Because the payment is received in convertible foreign exchange. If the payment is received in convertible foreign exchange, in that case, one of the conditions for export of services gets contravened, as a result of which it would not be regarded as export of services. So only if the payment is received in convertible foreign exchange, it is regarded as export of services. Otherwise, it is not regarded as export of services. If payment is received in INR, in that case, it is not export of services. If, let's say, one multinational company has one branch office in Kolkata, another branch office in Dubai. So if these two branch offices are merely establishments of a distinct person, so these two are merely establishments of a distinct person, in that case, it would not be regarded as export. This would be regarded as supply, interstate supply from Kolkata to Dubai, right? Person registered in Kolkata provides transport services for goods destined to Australia. So if there is any person in Kolkata and the recipient is at Mumbai, whereas the goods are destined to Australia, in this case, what happens? Person in Kolkata is providing transport services. Supplier is in Kolkata. Recipient is in Mumbai. This is not export of services. But the place of supply is the destination of goods, which is Australia. So in this case, person in Kolkata will raise an invoice on the person in Mumbai by showing it as an interstate IGST transaction. But since the place of supply is Australia, he would not show the place of supply as Maharashtra. He would show the place of supply as other territory, for which the person in Mumbai may have difficulties in getting ITC. This is a genuine problem. That if two persons are within India, goods are moving out of India, the person who is the recipient within India face certain difficulties for taking the ITC. That is a genuine problem that we face. So with this, we come to the understanding, we'll come to the end of the understanding with regard to import and export, right? If Vinay is still there, if he has some comments, because we have completed import and export, and if there are any questions also that we would like to take up, that also is fine, or we should take them up at the end. Vinay, if you're still there, or Jeannie?
Yes, I am there. Shubhamji, let's take it at the end.
Okay, no problem. Next we talk about export of goods on payment of tax. In GST, export can be bifurcated into two parts. Either export of goods on payment of tax or export of goods without payment of tax, right? When we talk about export of goods on payment of tax, the refund process provided by the government is an automatic process. That means as and when I export the goods and I file the shipping bill, I have to fill up my details in the return. Once I fill up those details in my return of my shipping bill and my invoice, they are automatically matched with the IceGate portal. So to clarify, what is a shipping bill? What is export? How does it work? So practically how export of goods works is, I'm in India. Now I want to export goods out of India. I first prepare an export invoice. Thereafter, after preparing an export invoice, I hand over the goods along with the export invoice to my custom housing agent, who is required to clear the goods from India to outside India. For this, he files a shipping bill with the custom authorities. So this shipping bill is a proof that we want to export the goods out of India. So he files the shipping bill at the time of clearance of those goods with the customs authorities. Now, with this shipping bill, there is a EGM, Export General Manifest, which is filed by the vessel operator. Let's say I am exporting the goods to a vessel. In that case, I am filing the shipping bill as the CHA. The CHA is rather filing the shipping bill on my behalf. Custom housing agent who is clearing the goods on my behalf is filing the shipping bill. Thereafter, the export general manifest is filed by the vessel owner or the vessel operator. They file the export general manifest. So invoice and EGM both are matched with each other. If both are matched and it is found that they are in line with each other, in that case, the goods are allowed to be cleared by the custom authorities. Thereafter, as an exporter, I want to file refund on this particular export. So I want to file export refund on payment of tax. That means if the value of goods is 100 rupees, the tax on that is, let's say, 18%. In that case, I would be charging taxes at the rate of 18%. That means 18 rupees would be the tax that I would be charging on those goods. But I cannot charge those taxes from the recipient outside India. I would only be raising an invoice of 100 rupees from that person on the recipient, whereas the export invoice will show a value of 100 and below the line the value of 18 rupees. 18 rupees I would have to pay out of my own pocket, and that 18 rupees I can get a refund from the government. So that 18 rupees I pay the amount and I get a refund of that amount from the government, right? So how does this refund process work on payment of tax? I, as the supplier, I am filing the shipping bill, right? Thereafter, once I file the shipping bill, it contains the list of the export invoice also against which the goods are getting exported. Thereafter, what I need to do is I need to file GSTR1, which is my GST return, which contains the list of all the export invoices. So the list of all the export invoices are provided in GSTR1, which is transmitted electronically by the common portal to the IceGate portal. And the portal confirms that the goods have been actually exported. So what happens is I file the shipping bill on the customs portal. The customs portal has the list of shipping bill and my invoice. Thereafter, the actual values of shipping bill and export invoice I file from my GSTR1. So my GST return contains the list of my invoice and my shipping bill. Shipping bill number, shipping bill date, export invoice date, value of goods being exported, the rate of GST on that, the tax component on it, everything I would have to disclose in my GSTR1, right? Thereafter, those details which I am filing from my GSTR1, I would have to pay the taxes of that through my GSTR3B. So whatever details I file in my 1, I would have to pay taxes through GSTR3B. Equivalent amount I would pay taxes through GSTR3B. So once 1 and 3B are in line with each other, thereafter what happens? Thereafter, the goods, the export invoice details are forwarded from the GST portal to the IceGate portal. So IceGate portal is the customs portal. So whatever details I am filing on the GST portal gets forwarded to the IceGate portal. The IceGate portal matches the details between the GST returns versus whatever is filed by the customs authority before the filed actual values which are verified by the custom authorities. Once GST returns and the amount verified by custom authorities are matching with each other, automatically the portal will confirm that the goods have actually been exported to the GST portal. Thereafter, automatically the refund of GST gets credited to the bank account of the exporter. So this is an automatic process by which the amount of GST gets credited to the bank account of the exporter. Now, what are the practical aspects of export of goods with payment of tax? What are the issues that we regularly face for this? First, tax amount as per 3B should be greater than equal to the tax amount as per GSTR1. So it needs to be remembered that whatever export of goods is made with payment of tax, in such cases, the tax amount which is shown in 3B should not be less than the tax amount which are there in GSTR1. So if you're showing 100 rupees tax in your GSTR1 for export of goods and 99 rupees or 99.9 rupees in your 3B, any rounding of error, any reason, you are showing any lower value, the portal will not transmit the data to the IceGate portal and your refund would not be granted. So your tax amount may be 101 rupees in 3B, but if it is 99 rupees, refund will not be granted. So please be very careful. The actual taxes that you're paying in GSTR 3B should not be less than the tax amount which you are paying in your, which you are showing in your GSTR 1. Shipping bill number and date, invoice number and date, port code should match between shipping bill and GSTR 1. As I said, this is an automatic process of refund where whatever details I am filing from my GST returns automatically gets transmitted to IceGate portal. The system does the matching of every field. And if there is any discrepancy between the two fields, it shows an error. So it should be ensured that the shipping bill number, the shipping bill date, that means the date when my custom authority, when the CHA has filed the shipping bill before the custom authority, the date and the number, the unique number of that shipping bill. Along with that, the invoice number which you're having, invoice date which you're having, the port code. Port code basically means every port from which the goods are getting exported has its unique code, right? So Calcutta, Bombay, everywhere there's a unique code, port code. In all these cases, wherever the port code is relevant, we need to make sure that the port code of the relevant port should be mentioned, because the custom website would verify if the goods have actually been exported from that port. So if you're mentioning any of this wrongly, the automatic refund process will throw an error and the refund would be stopped. So since it is completely system based, I request you to always match everything between the shipping bill and invoice, even the errors of slash, dash, or dot. If there is any mistake in such kind, then also the refund process is delayed. Refund is not allowed. Now, if there is any discrepancy between shipping bill and GSTR 1, in that case, what should we do? What if the system throws an error? So if there is a mistake in your GST returns, in that case, you have an option to amend your GST returns in the next month. So if your GSTR 1 was incorrect, you need to amend GSTR 1 in the next one. Next, apply for amendment of shipping bill if incorrect. So when we talk about shipping bill, if let's say there is a mistake in the shipping bill, my GST returns was correct, but my shipping bill is wrong. In that case, it has been provided that your shipping bill, you can apply for amendment of that, but you can apply for amendment only till the EGM is filed. So you can apply for amendment of that. Now, there are certain cases where a person has two types of invoice. Commercial invoice number is separate, tax invoice number is separate. In their shipping bill, they have mentioned the commercial invoice number. That means commercial invoice is given to the recipient of goods so that he makes the payment. So the tax invoice details are furnished. The tax invoice details are furnished in my GST returns, whereas the commercial invoice details are there in my shipping bill. This kind of error has occurred in a lot of times. In such cases, it is recommended that the shipping bill, the commercial invoice number and tax invoice number should be matched with each other. Such cases, there should be a concordance table which should be submitted. What is concordance table? Concordance table is a table which is submitted for matching and informing the GST department that this is my commercial invoice, this is my tax invoice. and both are corresponding to each other. So which invoice is corresponding to which tax invoice? I have to submit that, right? For that, I have to provide the concordance table. For this, thereby they would be able to match that. Okay, GSTR1 contains this tax invoice, shipping bill contains this invoice, and this invoice are of tax invoice and tax invoice are corresponding to each other. So that's why they are both in line with each other. Thereafter, the refund can be granted, right? IGST validation inquiry and GSTN inquiry to find the refund not received. So on the customs portal, you should create an ID. If you are exporting with payment of tax, it is recommended that on the IceGate portal, there should be a login ID and password which should be created, right? So if there is a login ID and password created, in such cases, one needs to verify from the IceGate portal as to what is the status of their refund. From the IGST validation inquiry and from GSTN inquiry, we can find out the status. From the GSTN inquiry, I can find out the list of all the export invoices which I have uploaded through my GST returns. And IGST validation inquiry lets me know as to what is the status of matching of every invoice and shipping bill between GST portal and the IceGate portal. For every invoice, they would let me know if there is any difference between these two. If there is any error between these two, the refund would not be granted to me, right? Now, if you look at refund related clarifications, a few clarifications have been informed, has been clarified that for the tax periods 1st July 17 to 31st March 21, a lot of people made a mistake. What mistake did they do? Rather than putting their export invoice details in 3.1b, which is outward taxable supplies zero rated. Ideally, it should have been under outward taxable supplies zero rated. Rather, they have been put under 3.1a, that means other than zero rated, nil rated or exempted, or 3.1c, which is nil rated or exempt supplies. So rather than putting under zero rated supplies, exports have actually been put under 3.1a or 3.1c. And the tax on those have also been paid through 3b. So now the system, what it does the matching between export 3.1b outward taxable supplies zero rated, and it tries to match the supplies with the 3b with the GSTR1 export values. So 3.1b is matched with export values. In that case, there is difference between these two. That case, the refund may not be granted. So if any person by mistakes pays taxes under 3.1a or 3.1c, the issue is that the refund is blocked for him because the 3.1b shows 0, whereas there is export value in GSTR1. So if the GSTR1 is more than 3b, you know that refund is not granted. So if anyone shows their value in 3.1b, the refund does not show the value in 3.1b, the refund may be denied. Such cases where anyone had disclosed the value wrongly under 3.1a or c, the government has allowed that even if the values has been shown wrongly under 3.1a or c, in such cases also the refund would be granted. The refund would not be blocked as long as the total value, which is the total taxes paid in 3.1a, b and c, all three together, is not less than the value shown in GSTR1 for export. Now, as I said, if you go to IGST validation inquiry on the IceGate portal, for every corresponding invoice and shipping bill, they provide whether they have been matched between GSTR1, GST returns, and the IceGate portal. So if if there is any difference between these two, in that case, they would throw an error. The reasons for these errors have been provided as to what can be reasons for these errors. For example, for SB000, it means that the invoice has been successfully validated. So SB000 basically means that the invoice has been successfully validated on the IceGate portal. Shipping bill and invoice are validated. SB001 means invalid shipping bill details. So if the shipping bill details are invalid, it goes to SB001, right? That means if there is any discrepancy between my shipping bill and my invoice, in that case, there is an invalid shipping bill error which comes in there. In such cases, it is recommended that one should apply for amendment of the shipping bill. Or if one does not apply for amendment of shipping bill, they should submit a concordance table to provide that, okay, my invoice number in the shipping bill is different. That's why this error is being caused. SB002, EGM not filed. So I have exported the goods, the shipping bill had been filed, but the vessel owner who had taken the goods, or the vessel operator who had taken the goods, does not file the EGM. In such cases, we get an error in the form of EGM not filed. Next, GSTN mismatch. Next error that we usually get is GSTN mismatch. That means the GSTN which is actually filing these export invoices and shipping bill is different from the GSTN who had actually exported the goods. So in the shipping bill, a different GSTN was mentioned, whereas GSTR1, a different GSTN, the supplier GSTN is different, a different GSTN is showing those details. In those cases, the portal throws an error of SB003, which is GSTN mismatch, right? Next, SB004, record already received and validated. So SB004 is basically where the records are already received and they have been validated, right? If I have already received the records and they have been validated, correct? That's fine. In that case, the refund is about to be granted. SB005 is basically invalid invoice number. So in case of SB005 is nothing but invalid invoice number. That means if there is any discrepancy in the invoice number, the error is SB005. In such cases, what do we need to do? We need to apply for amendment of GSTR1. That means in my GSTR1, I have by mistake written any wrong invoice number, or let's say in my shipping bill, the invoice number was wrong. In such cases, I should either apply for amendment of shipping bill by changing the invoice number, but that is a more cumbersome process. So we usually recommend, rather than applying for amendment of shipping bill in such cases, it is better to amend your GSTR1 and show the invoice number as per your GSTR1, as per your shipping bill. It's better that you should do that. SB006 is gateway EGM not available. So when the goods are getting exported through land, in that case, there is a gateway EGM which is filed. So in such cases, if the gateway EGM is not filed properly by the authorities, when the goods are getting cleared, in such cases, SB006 error comes in. In that case, we should follow up with them for filing the EGM. In both SB002 and 006, we should follow up for filing of EGM properly on the customs portal. Now, a refund under zero rated supply. So till now we had discussed refund for export with payment of tax and the issues pertaining to it. Now we are discussing about refund under export without payment of tax and the issues which are in relation to it. So normally the refund which is to be obtained is basically export turnover by total turnover into net ITC. So here we are talking about export turnover by total turnover into net ITC. Now, what is export turnover for goods? What is export turnover for services? And what is net ITC is something that we need to understand. So refund amount here basically means the maximum refund amount that is admissible. So the refund amount is basically the maximum refund amount that can be given to me. Net ITC basically is ITC availed on input and input services during the relevant period. So whatever ITC I'm availing on input and input services would be coming under my net ITC, right? Mind you, capital goods ITC would not be reflected here. So net ITC is only for input and input services and not for capital goods. See, turnover of zero rated supply of goods means the zero rated supply of goods made during the relevant period without payment of tax, under bond or LUT, or the value which is 1.5 times the value of like domestically supplied goods or similarly placed supplier as declared by the supplier, whichever is less. So please be very careful. Here we are talking about value of export during the relevant period. Fair enough. But that should have been without payment of tax. So turnover of zero rated supply will not exclude export with payment of tax. If in the same period you have export with payment, without payment, you should only take export without payment of tax. Or the value which is 1.5 times the value of like domestically supplied goods. So let us say normally the value of goods is 100 rupees, right? And it is sold in the domestic market at 100 rupees. In such cases, in the export market, the value should not be shown as more than 150. If the value is shown as more than 150, the zero rated turnover will only consider the value of 150 under export turnover. It will not consider more than 150 rupees. So export turnover will show a value of only 150 rupees. Let us say I do not have any domestic turnover. I only have export turnover. In that case, how do they identify similar value of goods in domestic market? So they are saying in that case, you should find out the value of goods for similarly placed supplier. Again, a very difficult task. You have to find out whether a similar placed supplier, at what value is he exporting? And thereafter, we need to identify whichever is less, right? Next, turnover of zero rated supply of services basically includes payment received during the relevant period for zero rated supply of services, plus zero rated supply of services where supply has been completed for which payment had been received in advance in any period prior to the relevant period, minus advances received for zero rated supply of goods for which the supply of services has not been completed during the relevant period. So there are three components to this. Payment received for zero rated supply. So there is a zero rated supply and the payment has been received in the same period. Let's say we're talking about refund for, let's say, July 2022. Payment received in July 2022, export made in July 2022. Both conditions are satisfied. Fair enough. Next, zero rated supply of services where the supply has been completed for which payment had been received in advance. Let us say payment received in advance in June 2022, whereas supply made during July 2022. So here payment had been received before the supply, right? So in such cases, in which month will the turnover be counted? It will be counted in July 2022. So payment received later on, even though supply made earlier. So in such cases, the date when the payment is received, minus advances received for zero rated supply of services for which supply of services has not been completed during the relevant period. So let's say in the month of July 2022, I have received some advance for which invoice has been issued in August 2022. In such cases, the refund would be added to August 2022, right? So in my July 2022, I will reduce that amount from the total payment received for export. Mind you, refund is granted on later of the two, invoice and payment. Later of the two, whichever occurs in whichever period, refund is granted in that period. Payment received in June, export in August, payment received in June, payment received in June, whereas export in August. In that case, refund would be in August. Payment received in August, whereas export is in July. In that case, refund again is in August. Later of the two events. So if any, this formula is basically nothing but later of the two events. If any payment was received earlier for which supply is happening in this period, please take it in this period. If payment was received, if advance was received earlier for which supply is occurring in this period, take it in this period. If export had occurred earlier, payment is received in this period, please take it in this period. That is what this formula essentially means for export of supply of services. Now, adjusted total turnover means the sum total of value of turnover in a state, excluding the turnover of supply of services and turnover of zero rated supply of services and non-zero rated supply of services. So, what are they saying here? That in your adjusted total turnover, with regard to your export supplies, both goods and services, please straight away take the value from your numerator, which is the export turnover. This export turnover, which we had taken for goods and services, in the adjusted total turnover, there are two components: export turnover, domestic turnover. For the export turnover, it is recommended that you should straight away take the value like you do for the numerator, right? And turnover of zero rated supply of services and non-zero rated supply of services. So here, for non-zero rated supply, you can take the value directly from GSTR 1 and 3B. So whatever value is there in GSTR 1 and 3B, you can directly take the values from that. For domestic turnover, for zero rated supply turnover, I've already informed, you can take it similar to what we did in the last slide, excluding the value of exempt supplies. So when you're calculating refund, please exclude value of exempt supplies from the total turnover in the denominator. So your denominator will not contain exempt supplies. And turnover of supplies in respect of which refund is claimed under deemed export or any other category. If the refund is claimed under deemed export or EOU or any other category, or advance authorization, EOU, lower rate of taxes, that turnover you should not be including. Now, the question comes, how do we plan for refund? A very important part, practical planning. Based on what criteria do we plan? Whether we should go on export with payment of tax or export without payment of tax. For this, first of all, we have to do the budgeting. As to what kind of exports am I expecting in the next few months or next few periods. In such cases, I find out if I'm exporting with payment or without payment. Where is my refund quantum increasing? Based wherever my refund quantum is more, I opt for that option, right? So, first way that we should do is basically identifying by doing budgeting as to which is more, export with payment or without payment. Next, refund quantum changes with clubbing of various months. Very interesting. If you are applying individually refunds for, let's say, January, February, and March for 3 months for 3 separate applications, versus you are applying one refund for 3 months together, the refund quantum is different. It's pure mathematics. So, refund export turnover by total turnover into ITC for January plus same formula for February plus same formula for March is not the same as total export turnover for 3 months divided by total turnover for 3 months into net ITC for 3 months. It is not the same. So it is always recommended that we should find out by clubbing as to if we club for these many months, what is the refund quantum and how does it change? We should conduct this cost benefit analysis and thereafter plan for the refund. ITC planning to ensure adequate amount is available in ECL. So please plan your input tax credit very clearly to ensure that there is a sufficient balance available in the electronic credit ledger. So if the balance is sufficiently there in the electronic credit ledger, then you should plan for refund. If you don't have sufficient balance, you know that there might be an output which may rise in the future, it's better not to apply for refund. You can use that amount of ITC for making payment of output taxes in the future. So it's better not to apply that refund. Now, how do we decide whether we want to opt for with payment of tax or without payment of tax? First, high credit accumulation versus payment required in cash. Now, let us say my credit is huge. Whenever I buy goods, the credit which comes in is huge. The rate of taxes on the credit is huge. And my output on the payment side is lower. So if my credit is, let's say, coming at 28% and my output is at 18%. In that case, even if I export with payment of tax, my refund on the output side would be restricted to 18%. So it is better to apply for a refund for export without payment of tax in such cases. Whereas on the other hand, if my output is significant, output is higher, output is at, let's say, 18%, whereas my input is 12%. So I know that my ITC will not be accumulating. So it is better that I should apply for refund with payment of tax because my refund quantum will get higher and my ITC balance will go to zero. My objective is to reduce my ITC balance as much as possible after applying the refund. It's as simple as that, right? Next, proportion of capital goods. Please remember, in case of export without payment of tax, we had discussed that refund is only granted in respect of input and input services. It is not granted in respect of capital goods. So if your capital goods quantum is significantly high, in such cases, it is better that we should opt for export with payment of tax. In such cases, on the capital goods portion also, the refund comes to me, right? Next, low output tax versus high output tax. So I need to identify what is considered as low output tax versus high output tax. If my output tax is significantly lower, in such cases, it is better that I should apply for export without payment of tax because my refund on the input is higher. If my output tax is high and my credit accumulation was there and I'm able to encash my output, encash my ITC because my output tax is significant, I should go for export with payment of tax. Next, please remember that in case of export with payment of tax, please remember that there is no cost of application for refund. It is an automatic process. Whereas in case of export without payment of tax, there's a cost of filing the refund, department communications, everything. It's a long process. So whether someone wants to go for export with payment or without payment, there is an important criteria. Whether they are ready to incur the expenditure towards filing of refund and department communications and the process, the whole process, because there might be some refunds which the department may disallow in certain cases, right? Next, fungibility between the two options. Export with payment versus without payment. How is it easily fungible between the two options? See, if it is easily fungible, I can opt for any one of these two options. In such cases, export, how easily can I go between these two options? In that case, I should plan which cases should I opt for it with payment, which cases I should opt for without payment, and in which cases I should move between the two. So that is something that we can always plan. Export by courier and automatic refund. Mind you, when it comes to courier, whenever I am exporting by means of courier, in that case, the refund process is not automatic, right? In that case, most of the cases we find that the details of export is not matching between the courier and because the courier is not always filing the shipping bill properly, as a result of which, or there's a system issue with regard to courier, as a result of which the refund on export with payment of tax is not granted. So it is recommended that if you're exporting small value items less than 25,000 rupees, you should export by means of courier, right? Next, important aspects of GST refund. Requirement of checking date of realization of export proceeds in case of export of goods. So, in case of export of goods, it is important that one should check the date of realization of export proceeds now. Earlier, for export of goods, the department did not check whether the money has been actually realized. But recently, there was an amendment thereafter. It has been mentioned that as per FEMA regulations, if my export realization has not occurred for export of goods, in that case, the refund amount which has been granted to me needs to be refunded back along with interest. So now it is important that one should match even their export invoice related issues and match whatever export they have made, whether there is a realization against this within the FEMA period. If not, the refund may have to be returned back. So please make sure that this is a very practical thing which we now have to do. Clubbing of refund between financial years are also allowed. So now, when we used to plan for refund clubbing between either separate applications for Jan, Feb, March versus Jan to March, this was one financial year. But if we wanted to plan refund for March and April together, because we thought that the quantum would be higher, that planning was not allowed. I could not club a refund between two particular financial years. Now, the clubbing of refund between the financial years have also been allowed. Next, we need to ensure that the value of export supplies is not more than 1.5 times the value of domestic supplies. So if the value of export supplies is less than equal to 1.5 times the value of domestic supplies, then only the export value can be taken. Otherwise, the refund would be restricted to 1.5 times the value of domestic supplies. And if you find that your export value is significantly higher than 1.5 times, it's better that you should go for export with payment of tax. This is a planning mechanism, because this particular restriction of 1.5 times is only for export without payment of tax and not for export with payment of tax, right? Requirement of disclosing HSN code on the inward supplies in the refund application. Now, it is important that every supplier or every exporter should maintain details of their HSN code on the inward supplies in the refund application. Through this, the department is able to identify which kinds of goods or services are being used for export. So this HSN code has now become mandatory. In fact, many a times the department also asks you to write the description of that HSN code or the ledger code of the inward supplies, because when you're exporting, you're taking refund of ITC. In those cases, in your refund of ITC, it is important for the department to understand which kind of ITC is being used. So in such cases, they ask for you to mention the nature of the HSN code, the description, the HSN code, the ledgers, everything has to be mentioned. Denial of refund if inward supply invoice not appearing in 2B or 2A. So if the inward supply invoice is not appearing in your 2A, in that case, the refund may be denied to you. So in such cases, please ensure that you should regularly, if you are an exporter, please follow up with your supplier or vendor on a regular basis so that they are disclosing their invoices regularly. If they have not disclosed, the refund may be disallowed. So you should keep checking your 2A, 2B regularly. Right? In case of export of service, matching of every invoice with respective BRC is no longer required. Matching is to be done month-wise now. See, now normally, earlier what we had to do was against every invoice we had to tag which BRC is there. Now, total invoice versus total BRC matching is required. But practically, if you go to for apply refunds to the government, in that case, the department asks you to do invoice-wise matching with the BRC. Not just this, they also ask us to ensure that we can prove that this invoice is against this BRC. That means whatever amount I have realized for export, it should be against a particular invoice. Which invoice is resulting in what amount getting realized has to be tagged with each other. For this tagging, what they ask is, they say that please ensure that your invoice, or rather your BRC, which is containing their realization, should contain the invoice number. If your BRC contains the invoice number, they know that, okay, this amount has been received against this BRC. And this BRC is against this invoice, right? So it is always easier. Refund to be allowed in proportion to ITC and cash under head from which paid. So, mind you, refund would only be allowed to the proportion of ITC and cash. So, if let us say I have, apart from export and let's say inverted duty structure, if let's say I'm applying for refund and I had made the payment of taxes from let's say ITC. Let us say by mistake I have paid higher taxes, 1 lakh rupees. I want to apply for refund. In such cases, if I want to apply for refund and I had made excess payment of tax of 1 lakh rupees, out of which 60,000 was from credit, 40,000 from cash. So it has been said refund would only be allowed to the proportion which is paid from ITC, and that would be allowed in ITC. So 60,000 excess payment of ITC would be recredited back to ITC ledger. Entire amount cannot be allowed as excess refund in cash, because if I have paid excess from ITC, I can get refund in ITC. If I have paid excess in cash, I can get refund in cash. So I have to be very clear, right? Now, there are some issues which are pertaining to the refund that we need to understand. Intermediary versus export import. What is intermediary? Intermediary is nothing but an agent. An agent is a person who makes two people meet. I am the supplier, you are the recipient. Let's say there is a person in between who are making us meet. I am in India, you are outside India. I am in India, you are in US. Now there is an agent who is in India who knows you and me. He makes both of us meet. That agent is basically in India now, right? Let's say that agent is your agent who makes you meet with me. So that agent raises an invoice on you. That intermediary raises an invoice on the exporter out of India. Normally, it seems very simple that it should be export. Agent is in India, location supplier is in India, recipient is outside India, so it should be regarded as export. But no, these cases will not be regarded as export, because the place of supply in such cases of intermediary is the location of supplier. In such cases, it is the location of supplier. So in every case, when I'm exporting any services from India to outside India, the department usually asks me to furnish an agreement. I need to furnish an agreement with the recipient outside India. So the exporter in India needs to furnish an agreement with the recipient outside India. Through this, the department verifies whether the recipient of services is an intermediary or not. If he is an intermediary, in such cases, the location of supplier is the place of supply, so there would not be any tax levied. If the intermediary is, if he is not an intermediary, the person who is supplying the services is actually providing technical consultancy, marketing services, advertisement services. He's not an agent who is making two people meet. In such cases, he will not be regarded as an intermediary. In such cases, the location of recipient would be the place of supply and it would be regarded as export. So whether or not an exporter of service is an intermediary is something which becomes a defining criteria for refund. So as a result of which, the department usually asks for an agreement between the exporter and the person who is outside India. If they are intermediary, in that case, the refund is not granted. Rather, they ask the person to pay taxes within India on the output. If it is an export, in that case, they allow the refund. Next, export by post. As I said, whenever there is an export by post, there is no option of exporting with payment of tax. The export has to be without payment of tax. Delay in furnishing LUT after making the export. See, normally export without payment of tax, whenever I'm making, I need to furnish the letter of undertaking or bond, right? Now, if I'm not furnishing this LUT or bond, in such cases, the refund may not be granted to me. In certain cases, I make the export, thereafter I furnish the LUT at a later date. In such cases, the refund should not be denied is what has been clarified through para 44 of circular number 125. It says very clearly, if let's say I make a delay in furnishing my letter of undertaking, my refund should not be granted. It should not be viewed adversely. It is merely a procedural error. The refund should not be denied because of this. Recredit of rejection of export with payment of tax. Another issue. See, what happens if I'm exporting, let's say, and I want to ask for a refund of 1 lakh rupees. Let us say I ask for refund of 1 lakh rupees, correct? Now, department grants a refund of 80,000 rupees, 20,000 refund they reject. So 20,000 refund on my ITC they reject. See, I have already debited the amount from my ITC credit ledger. I've already debited for 1 lakh rupees. Now I've only got a refund for 80,000. So 20,000 balance should be recredited back to my credit ledger. So 20,000 balance is to be recredited back to my credit ledger. I can always do that, right? But when it comes to export with payment of tax, my output taxes I had paid for 1 lakh. Department has granted refund of 80,000, 20,000 they have not. They have denied. How do I get the recredit back to my credit ledger? There is no option of recrediting the amount which they have denied back to my credit ledger, which is a very big issue, right? Next, refund where the output supply is at the rate of 0.1%. So if my output supply is at 0.1%, the refund would not be, the refund I would get under inverted duty structure. So inverted duty structure is basically if my output tax rate is lower than my input tax rate. So if I'm making any output taxes at the rate of 0.1%, in such cases, my output tax rate may be lower than my input tax rate. And the person to whom I'm selling is in turn exporting these goods. So in such cases, from the exporter's point of view, if I'm the exporter, from my exporter's point of view, my input is only 0.1%, and the supplier who is supplying to the exporter, he can apply for refund under inverted duty structure. Input tax rate more than output tax rate. The supplier will apply to the refund under inverted duty structure. The person who is thereafter exporting the goods after buying it at 0% will thereafter apply for refund. Next, entire credit blocked if appeal is preferred against rejected refund. So if appeal is preferred against rejected refund, the entire appeal which I am having is credit is blocked. Let's assume I have applied for refund of 10 lakh rupees. Refund is not allowed of a single penny. 10 lakh rupees, I go into appeal. Now when I had applied for refund, 10 lakh rupees I had debited from my electronic credit ledger. Fair enough. That 10 lakh rupees I cannot use for making payment of output tax. Now, if that 10 lakh rupees is denied, I go into appeal. Now I go into appeal. Second stage, let's say also it is at the first appellate authority also denies. Thereafter, I want to go appeal to the tribunal. The tribunal is not yet formed, and my amount is already debited from my credit ledger. I cannot get it back. So that amount is basically stuck up till the appeal is finally disposed of, which may take 3 years, 4 years, 5 years. And by that time, I may not have balance remaining in credit ledger. So this is a very big issue. As of now, because of the tribunal not getting formed and my entire credit getting blocked because of this, my refund stays blocked, which is a very big problem. Normally, a lot of people are withdrawing their appeals only because of this reason, that their amount is becoming and it stays blocked. Bad debt in case of exported goods. Normally, if you're exporting the goods and there is a bad debt, the recipient does not pay. It is not your fault, right? You have exported the goods, you have done everything which you could, but the recipient is not paying. In such cases, the refund should not be denied. But the problem is, if the payment is not realized as per the FEMA regulations, the refund is not allowed to us. So this is a very big problem. In case of bad debt, you have to take permission from the RBI. Then only you can keep the refund with you. Okay. Now, what are the common notices that we are getting under refunds? What are the common notices that we are usually getting in refunds? Differences between 1 and 3B. If my output tax, there is difference between my GSTR 1 and 3B, they would always ask for differences between these two, and they would take lower of the two values. So you should reconcile and let them know, okay, my difference was there, but it was corrected in this month. As far as practicable, please ensure that 1 and 3B are always matching with each other. Next, dispute on the value of export of goods. Let us say, when we talk about export of goods, there are 3 parts which are relevant: export invoice, shipping bill value, and payment receipt. See, when you're exporting the goods, your export invoice usually takes the value of as per your books of accounts. Shipping bill requires you to declare the value of goods as per the customs rate. So foreign exchange rate has to be taken as per customs. And when the payment is made, let's say of $10,000, in that case, the value changes. Let's say I prepare the export invoice today for $10,000. The value is of 80 rupees. Now, tomorrow, when the goods are exported, the shipping bill value as per customs is notified at 79 rupees. Whereas when payment is realized, the value of dollar is 78 rupees. So I'm getting 78,000. So there are 3 values which are there. So it has been stated that in your GST returns, you should show the value of lower of export invoice versus the shipping. You should show the lower of these 2 values. Export invoices versus the shipping bill, whichever is lower is the value that you should be taking. Versus the payment received. Whatever amount you are getting as payment, you have to show that usually before the department. To my mind, where the dollar value is the same, even if the payment is received lower in rupees, doesn't matter. The refund amount should be as per shipping bill or invoice, whichever is lower. So according to me, the payment received is not important, right? Payment received in case of export of goods, if the payment received is lower, according to me, it is not important. Next, what happens is department has a dispute in the value of goods. Department says that we are not agreeing with the value of goods that you have disclosed in your GST returns. So what they usually do is they reduce the turnover only from the numerator and not the denominator. What is the meaning of this? Export turnover by total turnover into ITC is the refund. So your numerator is export turnover. You have taken the value of 10,000 into 80 rupees, which is, let's say, 8 lakh rupees. Now, department is of the view that the value should be 7,90,000. So in the numerator, they ask me to make the value 7,90,000. But in the denominator, they keep the value as 8 lakh rupees itself. That is not right. If you are reducing the value in the numerator for export turnover, in the denominator there's export turnover plus domestic turnover. So for export turnover in the denominator, please keep the same value of 7,90,000. This has been clarified through the circular. So the department usually does that. We have to clarify and always give the reference of the circular to them. Right? Next, reconciliation between between invoices, BRC, Statement 3, GSTR 1, 3B in case of export of services. So in case of export of services, we have to reconcile between all the parts. Invoice, BRC. Invoice is basically the export invoice for services. BRC is the actual money realized. Here the money realized becomes important. Ideally, export invoice versus money realized, whichever is lower, we should take in my export term, usually. Statement 3. Statement 3 is basically showing the both export invoice and shipping and the BRC values in front of each other. So that invoice, basically this statement should show both my value of export and the money realized. And ideally, I should take lower of these two in the value of my export turnover by total turnover. Right? GSTR 1 and 3B. So GSTR 1 and 3B, whatever values I am taking, GSTR 1 and 3B, I should take the value of export of services. So reconciliation when I'm doing, I should take the value of GSTR 1 and 3B also. So export of services, export invoice value should be forming part of my GSTR 1 and 3B, right? Next. Please ensure that all these values, invoice, BRC, Statement 3, 1 and 3B stand reconciled, because this reconciliation we have to furnish before the department. Next, usually in your ITC, what you have to do is, when you're taking a refund of your ITC, export or inverted duty structure, we have to ensure that my values are matching with my GSTR 2A. Even if there is any smallest of difference in my GSTR 2A and 3B, even of slash and dash or small errors, the department usually tries to deny the refund. Even if there's a difference of 5 rupees, they usually try to deny the refund, saying that the value is not matching. Again, this should not be the case. We should fight it out. Small differences in 2A and 3B, at least I would recommend before filing the refund, you should make this reconciliation very clearly. If there is any smallest of differences, please reconcile those differences first before applying for refund, right? And for small differences, you should give all these clarifications, which is very clear. Even if they take lower of the two values, that's fine. They cannot deny the entire refund. If the value is 1 lakh rupees versus 1 lakh 10 rupees, such cases, there cannot be a denial of refund, right? So the department tries to deny by saying that GSTR 2A is not matching with 3B. Next, HSN code of invert supplies are not available. So where HSN code is not available for invert supplies, this is again one more reason for denial of refund. If let's say in your ITC you do not have HSN code available, in such cases the refund might be denied for you, because department requires you to disclose the HSN code. Based on that, they would ask you to in fact explain the nature of supplies. Once you explain the nature of supplies, they determine whether the ITC is eligible, whether it is of capital goods or not. All these cases they try to determine, right? So please ensure the HSN code is mentioned accurately, because in some cases the department, based on the HSN code, may also ask for physical copy of invoices to prove that ITC is eligible. So please ensure that the HSN code is mentioned accurately. Next, please ensure that when we talk about GSTR 2A, there should not be any like discrepancy between your 2A and 3B. That is one part. Second, if let's say your 2A is showing the figures in July and you're applying your refund of for also July, usually they accept that. But if your 2A is showing those figures in August or September, whereas you had already taken the refund in July, they don't accept that. They say that it has not come in the same month, 2A will not accept. That is not right. Whenever you are taking the credit, the refund should be allowed, as long as it is appearing in 2A, even if it is appearing later on 2A or it is appearing earlier in 2A. It might be appearing in the 2A in March, whereas you're applying the refund in July. There cannot be any denial of refund because the circular 125 is very clear. The moment you take the ITC in a particular period, you can take the refund of that. Only condition is it should be appearing in 2A. It does not talk about the period in which it is appearing. And if you're taking March month's ITC in July, that is also not a problem. The period in which you're taking the ITC should be the period in which the refund should be granted, right? Not granting refund on all ITC which is not directly attributable to export. So the department, what it does try to do is, if any ITC is not directly attributable to exports, they try to deny the refund of that amount. Right? So if any ITC is not directly attributable to export, they try to deny the refund of that amount. Please ensure that refund should not be denied, right? Refund should not be denied simply because ITC is not directly attributable to export. If my ITC is on inward supply, it is used in the course of furtherance of business. A chartered accountant services is not directly helping in exporting goods. Maybe I'm an auditor. My goods are not, my service is not directly helping in export. But since my ITC is in the course of furtherance of business for the entity, the ITC or the refund on this invoice, the GST on this cannot be denied. The department says since it is directly not related to export, we will deny the refund. That is not allowed, right? Non-recognition of export of services with payment of tax. Now, if there is export of services with payment of tax, we should get the refund on my output. Department does not understand this concept. They only understand refund on ITC. In number of cases, they try to give the refund only on ITC and do not provide the refund on the output. That is again very surprising. Consideration of capital goods incorrectly based on HSN code. So we know that refund can only be allowed in respect of input and input services in case of export without payment of tax. So normally what the department does is, if there are any capital goods, they do not consider those capital goods in the first place. This is very absurd because what happens is they try to determine on their own what is to be considered as capital goods. Capital goods definition is very clear. What is capitalized by the assessee in the books of accounts? If I am not capitalizing it, I am putting it in my revenue. I am not capitalizing it in the books of accounts. The refund should be allowed to me. Whereas department what it does try to do is, based on the nature of transaction, they try to identify whether it should be capital goods or not. That is not their call. Whether it is capital goods or not is the call of the assessee. So if I have taken some capital goods in my refund, or rather I have not capitalized certain items, I have put it under my revenue because I feel as per my accounting standards, it should be part of the revenue. Department is no one to say that this should have been capital goods. It is not the case. So refund should not be denied on this. Department, what it does try to do is, based on the nature of ITC, they try to say that, okay, this is capital goods, this is not capital goods. That is not something which they can do. Interest on delayed refund. If the amount sanctioned is not granted within 60 days from the date of receipt of application, interest at the rate of 6% is payable. So let's say whatever amount is I have applied for is not sanctioned, it is not refunded within 60 days, then interest would be applicable at 6%. So that tax authorities need to provide the sanction order within 45 days so that disbursement is completed within 60 days. So if we see the number of cases when the refund application is made and the refund is not granted within 60 days, the interest becomes due. In such cases, the assessee can always file for a interest application. Recovery of refund on goods where export proceeds not realized. So it has been said that if you have applied for refund of ITC or on tax paid, and if the sale proceeds are not realized within the period allowed under FEMA. So as per the FEMA regulations, there is a period within which the refund can be allowed. The refund is not allowed within this time period. In that case, If the export proceeds are not realized, in that case, the amount of refund needs to be returned back along with interest for the period of 30 days. If RBI writes off the requirement of realization on merits, so the RBI writes off the requirement that there is no realization now required. In that case, refund need not be recovered. So the RBI says that, okay, fine, don't realize this. Later on, let's say the money gets realized after it is returned back. So I have received the refund, now I've returned back the refund. Now the export proceeds have been realized. And if they are furnished, the proof is furnished that now the money has been realized. In that case, the amount which had been recovered would be refunded back to the lessee, right? Non-requirement of LUT or bond in case of exports. So it has been said, whenever you are making any exempt supply and you are exporting that exempt supply, let's say non-packaged rice you are exporting, in such cases it is an exempt supply, but this is getting exported. In such cases, since there is no output, there would not be any refund required in the first place also. Refund on cancellation of contract. Let us say I have received any advance against a contract. I'm a movie actor. I have received an advance for making a film with from the producer. Now I have received that advance and I have paid taxes on this. Now let us say the producer has let's say the movie actor has received the advance and pays the taxes on this. Thereafter, the movie gets cancelled. Because of COVID, the movie gets cancelled. The advance I have to return back. In such cases, the supplier must claim the refund of that amount under refund of excess payment of tax. So in such cases, the amount I need to claim a refund of whatever taxes have been paid. Let us say, instead of applying, rather than showing it as an advance, I issued an invoice against this that I have made this partial supply. In such cases, I can issue the invoice. And when the movie gets cancelled, I can show the credit note. In such cases, I don't need to apply for refund. I can simply reduce my output taxes of the next month. But if I don't have sufficient output taxes, in that case, I can, if I don't have sufficient output taxes, I can apply for a refund, right? In such cases, I can apply for a refund. Late furnishing of LUT. Substantive benefit of zero-dated supplies may not be denied where it has been established that export in terms of relevant provisions have been made. The delay in furnishing of LUT in such cases may be condoned. So para 44 to circular 125 says very clearly that even if you, let's say you have made any delay in furnishing of LUT, but it has been established that exports have been made properly, in such cases, the delay will not result in denial of the refunds, right? So in such cases, the refund should be allowed. For this, we can take help of Sabare International Tribunal Chennai, well-known polyesters, that if the appellant did not renew the LUT and the execution of LUT was only a procedural lapse, in such cases, the refund cannot be denied. So this is my last slide for today. These are all the types of refund that we need to understand. First, excess balance in the cash ledger. If I have got any excess balance in my cash ledger, I have paid extra money in my cash ledger, which is lying with me. It is like a Paytm account, which is lying with the government. If any extra amount is there, I can take that back, right? Refund of ITC on account of export with or without payment of tax, that we have discussed. Refund on account of export of services with payment of tax. So if I have exported any services with payment of tax, I have to look at all the conditions which I had discussed today. If all the conditions are satisfied, the refund would be denied to me, would be allowed to me. Refund of ITC accumulated due to inverted duty structure. So if my input tax rate is more than my output tax rate, in that case, refund would be granted to me. Condition is that my input and output should not be the same. So this is one of the conditions which the department tries to place, but input and output, usually, if let's say I am packing gas containers, gas containers into small gas containers, the product is the same, but my input rate is more than output rate. In such cases, refund would be allowed. So my input and output being the same is something, basically it has to be absolutely the same. The same product is purchased and sold. In such cases, the refund is not allowed. Otherwise, it is always allowed. Supply to SEZ unit or developer with or without payment of tax for authorized operations. So if I am supplying any goods to SEZ unit or developer, in that case, I have to identify whether it is for authorized operations. I need to get a stamp on it. So the authorized officer who is sitting at the SEZ port and who is admitting the goods into the SEZ port, into the SEZ area, he is required to put in a stamp on the invoice. If he is putting a stamp that this is being admitted into the SEZ for authorized operations, in that case, it would be considered as export, or rather it would be considered as zero rated supply. And if I'm making zero rated supply, it can be both with payment or without payment. Refund by recipient or supplier of deemed export. If I am making any supply to an export oriented unit, EOU, in that case, this is regarded as a deemed export. So in this case, either the supplier who is supplying to EOU can claim a refund, or the recipient who is receiving those supplies can get the refund, any one of these two. Refund on account of assessment, provisional assessment, appeal, or any other order. So if let's say you had any scrutiny, any assessment, or any appeal pending, which resulted in a judgment which is favorable to you. So whatever taxes that had been paid, you can thereafter apply for a refund of that, right? Next, refund on tax paid on an intrastate supply, which is subsequently held to be interstate. So if any tax had been paid on intrastate supply, but which is later on said to be a interstate supply, by mistake, I paid taxes under CGST, SGST instead of IGST. In that case, I can pay the correct taxes. I can pay IGST and thereafter apply for refund of CGST, SGST. So this is the category where I can do that. Refund on account of excess payment of tax. Let us say you make any excess payment of tax and you want to apply a refund for that. If you have made any excess payment of tax and you want to apply the refund, in that case, it can be done under this category, refund on account of excess payment of taxes. You have by mistake made higher payment which you should not have made in your 3B. Then you can always go and apply for a refund under this. Refund on account of any other reasons. So apart from this, there is a residual category wherein you don't need to even specify the period. Period of refund also, in that you don't have to specify. In any case, let's say you have filed a nil refund by mistake. Now, what the government has done is they have, let's say you have applied a nil refund for April 19, and later on you thought that this nil refund should be filed because the limitation period for my filing of refund for 2 years has expired. Now the government increases the limitation period beyond 2 years due to COVID. Now you have already filed the refund as nil, so you cannot rectify that application. What you have to do is you have to file a refund under any other category on account of any other reason. If you do it under this category, in that case, you can get a refund even for a period where you have filed a nil refund by mistake, right? So this is, I think, the entire coverage with regard to my presentation today. Thank you so much to everyone for giving me a very patient hearing. I would now request Vinayji also to share his views on the topic that we have discussed. We would love to hear him also as to what his views are regarding this topic. And also, if there are any questions from the viewers also, that also we both would like to take up and answer. Thank you. Thank you so much to IDT, to everyone for giving me a very patient hearing, and to the Board of Studies for giving me this wonderful opportunity.
Thank you, Shubham ji. Over to Vinay ji, please.
Yeah, good afternoon, everyone. And I have to first appreciate Board of Studies for conducting these type of sessions for the benefit of students, which help them in their practical training, and also because, as the speakers said, some firms will do some work and some firms may not do this GST work, or some firms may not do audit work. But here you're learning all those from expert speakers. And I think I need not cover anything with respect to topic as such, because I think Shubhamji has already done in detail. And also I could see when I'm seeing the issues in which he dealt with and all, his practical experience or practical exposure in the field of GST refunds and the dealing with the department and all is clearly visible from that. So I have nothing to add for him, but there are a few questions which are from the participants, which I wanted to pose to you, Shubhamji. Yeah, first one is
Sure.
How to calculate refund amount on account of unutilized input tax credit.
Okay. For export with payment, or for export without payment of tax, we have to take the formula of export turnover by total turnover into net ITC. But with regard to refund with regard to inverted duty structure, the formula would be turnover of inverted rated supplies divided by total turnover into net ITC minus tax payable on inverted rated supplies into net ITC on input divided by input services. So you can refer to this formula under Rule 89.4 and 89.5 because this is a formula which I think was already dealt in detail, I think, in the first part of refund. So, and today also we had touched upon it. So this is where you can get the entire details.
Yes, there is one more question, like you talked about interest on delayed refund. So is it automatic, or did you find any case where the government or the department has given interest on the delayed refund?
So normally it is never automatic. So we always have to make a separate application for it on account of refund, on account of any other reason. We should make an application if we feel that the 60 days time period is getting lapsed. So normally they would never provide it automatically, and we should apply for our rights. If that gets denied, in that case, we can always go for appeal also against that.
And one more question on provisional assessment. If on finalization of provisional assessment, if any tax becomes refundable, what is the procedure or what has to be done?
So in that case, there is an option of refund on account of provisional assessment. If any amount becomes refundable, you should upload the order, which is the final assessment order, and also the payment proof that you had made under provisional assessment. For the differential portion between final assessment and provisional assessment, whatever amount comes as a refund, that would be allowable to you.
And also someone asked about GST refund on account of refund as a consequence of judgment, decree, order, or direction of tribunal or court.
Yeah, so if I'm having, let's say, any refund on account of tribunal's judgment or any commissioner appeals judgment which is coming in my favor, I can upload that order and I can show the amount which had been actually debited from my credit ledger earlier. And thereafter, the differential amount which I have not got as a refund, that I can now get after that order is shown to them.
And this is actually a general question, like what documentary evidences are required for filing the refund claim?
Okay. I think this was covered in the first day by the session, but in any case, for export of goods, the two major documents which are required was export invoice and the shipping bill. For export of services, the two major documents which are required are export invoices and the BRC copies. Along with, in both the cases, there is a requirement of uploading Annexure B, which is total list of ITC which you have claimed during this period. In both the cases, you have to upload the list of all the all the ITC which you have been claiming for this period, along in a particular format which is prescribed by the government.
Yeah. In this case, what I generally mean, when we apply for refunds and all, the document of means almost 2A and 3B or whatever it is, 2B or 3B, the department is asking for a line-to-line what you call reconciliation. So is that mandatory?
See, yes, absolutely. So if you look at Circular 125, it says that only ITC which is now appearing in your GSTR 2B or 2A is only allowable as refund. So in the annexure B, which I was just saying, where it contains the entire ITC, there's a column for ITC which is appearing in 2A, 2B. So that we'll have to mark over there. And ideally what we do is in our GSTR 2B which we are uploading or GSTR 2A which we are uploading along with the application, there we mark those invoices that this is actually appearing in 2B. You can verify this.
And refund of ITC shall not be allowed if supplier of goods or services avails a drawback in respect of CGST or claims refund of IGST paid on such supplies. Why?
See, normally drawback versus GST refund is paid on the same component. Lower rate of drawback is basically paid on basic customs duty, whereas higher rate of duty drawback is paid on BCD plus IGST. If you are claiming lower rate of drawback, which is only on BCD, you can claim refund of IGST, no problem. But if you have already claimed a drawback on BCD plus IGST, you cannot claim a refund once again on the IGST component because it will amount to double benefit.
And what can you share some experiences of your practical experiences of refund?
Yeah, so basically what happens is department has an objective of issuing very long show cause notices. So what they usually do is, even if we are filing the entire application as per the format and as per the formula required under Circular 125, which is the primary circular for refund, still what the department does is they would ask for copies of all export invoices. They would ask copies for all the inward supply invoices. There we have to explain them, see, it is written that it is not required. All the copies of invoices not required. Don't need to verify each and everything. What you have to verify is basically the export has been made properly and then the ITC is basically accruing properly. If you are harassing us with so many documents which are part of scrutiny process, which should not be part of refund process, in that case, it is something which is going beyond the legislation. So we usually have to explain it to them. We have to make them understand. And also we have to make detailed replies for show cause notices, particularly after the instructions which have been notified and the SOP which has been provided that they need to pass speaking order. They have tried to increase the amount of visits to the department, which was otherwise not required. Otherwise, we should be only filing the application, get the show cause notice, reply, it should be fine. But without the proper visit to the department, without making them understand physically and submitting physical copy, the refund is not easily granted. That is a major problem that we usually face.
Because even the same means they are doing more cautiously as of now, because there are many frauds which are happening in case of refunds, and even in case of availment of ITC, there are many fraud cases that are happening. When it's big ticket cases, the few in number, but the value is more. So they are very cautious in even verifying the input tax credit. Because even recently when I am talking with my clients, it was like after this 16.2 AA introduction, they were like, whatever is there in 2B is allowed as ITC, irrespective of invoice. They were of a more opinion that why is invoice required? It's R and 2B. It's an alternative that it's already there in 2B, and supplier has confirmed that he has sold to me. But they are forgetting that the invoice is the base document, on which the first condition of 16.2 is there should be an invoice. And even
Absolutely.
for supply of goods, means even for outward supply or even for inward supply, whatever it is, it should be there. And can you throw some light on e-invoice and means, because as of now the turnover limit is being reduced. So and the people are getting ready with the e-invoice system also. So what is e-invoice to do with the refunds and eligibility of ITC?
Okay. See, now with e-invoicing coming into place, there is an automatic requirement of generating invoice on a real-time basis for every person who is eligible to do so. Now, ITC, if let's say my supplier is required to generate an e-invoice and he has not given me an invoice, in that case, my ITC may be called into question. So as a result of it, if I am not getting proper copies of invoice, whereas I know I should have got it, in that case, please contact your supplier, because tomorrow, if you apply for a refund and department asks for copies of this, and they are able to find out that the supplier has not generated an e-invoice, or he has not given an invoice where he was liable to do so, the ITC and the refund of that particular amount may be called into question. So that is something which is very important after the invoice has been introduced.
Even that is making life of the recipient difficult, because I don't know what is the turnover of my supplier. If he is a regular supplier and all, yes, I can understand. But I don't know the turnover of his eligibility of he generating an invoice. And I am being penalized. Even the same situation with respect to invoices not appearing in GSTR 2A. Even the same situation with respect to tax not being paid by the supplier. I have paid to him, but he did not pay to the government. So even then, even the recipient is being questioned. And even now, the additional thing of e-invoice. E-invoice also, I don't know whether he's eligible for generating e-invoice or not, but I have to get it, because all this is connected again to my refund. Because again, refund, if I have to get a refund, it should be an eligible in, ITC. So what planning actually is, or what precautions are required as students, or as a CA article students, or as a persons who are into refund applications and all, to do with respect to this, means with respect to communication to the clients?
See, in my view, with regard to this, what I mean, again, as you rightly mentioned, it's a very difficult thing for a recipient now to check the amount of precautions that he has to now take after this invoicing has come into place, and after so many conditions have been put under the law for taking of ITC. But the best we can do, and the way we suggest to our clients, is always have a proper tax invoice. Always check the turnover of the supplier. That that option is available with you in the search taxpayer option after you log into the GST portal. There, if the supplier is a significant supplier and he is required to generate an invoice and he has not done so, then you should follow up with the supplier for the copy of invoice. Second, if he has shown it in his GSTR1, the invoice, but he has not uploaded it in 2B, please make a monthly reconciliation and follow up with the supplier on a monthly basis as to what is the status of their uploading of the invoices in their GSTR1. Next, receipt of goods or services. We need to make sure that if I have the proper proof that I have actually received the goods or services from the supplier by means of having an invoice, by if I apart from the invoice, I have the GRN copy, the goods receipt note copy. In case of services, I have the proper contracts or proper proof that the services have been received by means of email or whatever it is. In all these cases, I should have proof. Next, I should find out whether his GSTR 3B has been filed. 3B status, I can find out whether his 3B has been filed from his from my GSTR 2B. Next, if his 3B has been filed, in that case, what proportion of taxes of his GSTR 1 he has paid from 3B? If you go to search taxpayer option, there you would find out if 100 rupees is the tax amount that is shown in 1, whether he has paid 100 rupees or 99 rupees or 101 rupees, what proportion of taxes he has paid. If he has not paid taxes as much as he should have paid, then my ITC may be called into question. Then also I should follow up with the supplier. Whether he is furnishing his return regularly, you can search taxpayer online and find out whether he's furnishing his return regularly. So all these are different precautions that we can take for making sure that our ITC is not called into question.
Even with respect to refunds of inverted duty structure, again, there will be a big challenge on first thing to prove that there is some inverted duty structure, and also the formula, which is being revised, and again now being inputs and input services being added. So what do you think about that inverted duty structure now?
See, to be honest, this is a very welcome change which has now occurred in the inverted duty structure, because normally, even if they are not giving refund of input services, but in the formula there was a essential presumption that the tax paid by an assessee is always from inputs. So they would always assume whatever tax I'm paying under inverted duty structure for my output taxes, it is completely from my inputs. So they would always reduce my formula for ITC by the tax which has been paid on my output supplies by assuming everything is on inputs. So this is a very welcome change which they have now done by stating that this is whatever amount that you're paying is not presumed to be from only inputs. Whatever proportion is there from input and input services, that you should find out. Basically, they have asked the assessee to find out what proportion is there from input and input services. And thereafter, only the proportionate amount they are asking me to reduce with regard to inputs. To my mind, they should also add capital goods over there, because the proportion which I'm paying taxes through my of my output is also from my capital goods. So ideally, it should be tax payable into net ITC on inputs divided by net ITC on input services capital goods. But for the time being, they have not inserted capital goods as only input divided by input plus input services. And this is directly as a consequence of VKC footsteps, Supreme Court judgment, wherein the Supreme Court had asked the department to have a closer look at this formula, which has a essential presumption as to entire tax being paid from inputs. So which they have now rectified. So to this extent, my refund amount should go up.
Yeah, it is actually, as you said, it's a welcome move, and we are expecting this since many of the chartered accountants or many of the persons who are in the field of GST are arguing that it has to be, means on the input services also has to be given, and at least after 5 years, we have got a welcome that it is included in the means to reduce the litigation. And what about, means coming to litigation, what about the litigation on refund? How are it being dealt with, and what are the major issues that are being raised in case of litigation with respect to refunds?
Okay. If you look at litigation as of now, a major area of litigation, there are two major areas of litigation only at the moment. One is registration, the other is refund. That's all. Because most of the cases, when we go to the matters traveling to a certain level, because since the adjudication is still happening, the appeals have not yet happened, the demand orders have not come. So refund is one area wherein regularly the refunds are getting denied by the department due to umpteen number of reasons which we had discussed today, and which is causing a lot of litigation at the commissioner level. And once the refund is denied at the commissioner level, the problem that arises is the assessee is not able to approach the tribunal for getting relief, as a result of which their major working capital is blocked. So a department is denying the refund even at the first appellate level, which is again department level. There is no independent judiciary there. There the refund is denied, and an independent assessee who is having, let's say, a client who did not file LUT. Now, his refund is not getting approved because at the department level, no one approves that refund. Even the first appellate authority is not ready to accept those contentions. But at the tribunal level, since there is a substantive right of the assessee to claim the refund if he has actually exported the goods or services, if that refund is denied to him, in that case, that amount should be given back to him is something that the tribunal would ultimately decide, because they look at the interest of justice more than the verbatim of the law. So in such cases, major issue is that the assessee is not able to get relief and their entire working capital is getting blocked. So this is one area which I think would be solved by tribunals. On the other hand, department also is facing a problem that if the refund should be deniable, but it has been accepted at the commissioner appeals level, they are not able to file an appeal. But those cases are far fewer comparatively, as compared to the cases where assessee is denied the refund and they are not able to get it. So that is the major area of litigation that we are majorly suffering from at the moment, which we expect once the tribunal gets constituted would be allowed to us.
Yeah, because there is some movement in the GST Council also regarding the implementation or the at least creation of the GST appellate tribunals. So we have to wait and see, because in the next few months we might have an announcement regarding the GST appellate tribunals also. So because as of now, you are right that many people are waiting for appellate tribunals to be created, so that, because means it's actually delay that it's already 5 years, and already the litigation of what you said with respect to registration and refund, because registration, I think it's almost being at the Commissioner of Appeals level, at least they are being solved, but refunds and all on the legal matters and all, they have to move the High Court directly, skipping the appellate tribunal. So because of the
absolutely.
Yeah, so that's the problem what they are facing. And one more question is, I'm closing my business and I have an input tax credit balance in my electronic credit ledger. Will I get a refund of that?
To my mind, there is no provision at the moment for getting a refund of that. If your ITC is still lying, there's no way to encash it apart from the 2 cases which is there in 54.3, export and inverted duty structure. So it is better that you should make some supply before you close your business, if it is possible. Otherwise, there is no option. But
yeah, it is means the refund is actually almost in the seamless credit structure of GST, and what principles the GST talked about at the time of introduction of GST and all. But the refund under GST is very restricted. Means it is only only 1, 2, 3. That's all, nothing else. And also there is some rule that if the refund is something will be credited to the Consumer Welfare Fund also. So can you talk about that details of what
whenever? So basically, this is talking about doctrine of unjust enrichment. Whenever we have any amount, let's say I have exported, let's say I have passed on the benefit, I have received the money from, let's say, you, and let's say I have passed on the burden of taxation to you. You had booked a flat with me in a real estate project, I have passed on the burden to you. Now, 1 lakh plus, let's say 5% GST I have collected, now you have cancelled that flat. I want to go to the government for applying the refund of 1 lakh for the 5,000 GST that I have paid. Here, until unless that 5,000 I am paying back to you, because I had collected 1,05,000. Since I have collected 1,05,000, you have borne the burden for it. I have to pay back 1,05,000. Thereafter, I can ask for a refund of 5,000 from the government. If I don't pay back that amount, basically I am keeping the refund amount as well as I am keeping the amount which I had paid as taxes. So, and whatever amount I should have recovered, I'm not able to recover from you. So that is a major issue, which is with regard to doctrine of unjust enrichment, wherein if, let's say, I am getting any refund, which should not have, which I am, let's say, not allowed to get that amount. In that case, since the burden has been passed on, I will not be allowed a refund of that. It would go to the Consumer Welfare Fund of the government.
So, and also with respect to refunds of earlier paid taxes, because if there is any service tax issue or service tax or VAT, what will happen to those things?
So that will be, in my view, governed by the earlier law, whether the refund is allowed on that, because GST, we cannot take a refund if I have paid taxes more in the earlier law. So we'll have to look at the earlier law and get the refund of that.
Because, and also many people missed transition credits also, which are already there in their service tax returns or excise returns or VAT returns. So what will be the status of those? Means should we go and get refund from by asking to do the assessment of the previous laws, or that's the only option I think we have? Means
as of now, sir, yeah, the Supreme Court judgment has come in recently for transitional credit. So now from 1st September to 30th November, the portal would be opened. So now we'll have an option of claiming a refund, or rather the transitional credit, wherever we have missed any transitional credit, and get it in the electronic credit ledger. After proper verification, it should come back to our credit ledger.
Okay, and one more question on time limit for application of refund, that 2 years from the date of. So in that you'll have in the last clause as any other cases. So what might be the any other cases?
So in any other case, maybe if I have made any excess payment of taxes, I have by mistake, I should not have discharged taxes or any output, but by mistake I have discharged it. In that case, I can consider it as excess payment of tax. And from the date of payment of tax, there would be 2 years of time limit which would be calculated. And based on that, I would be getting a refund on the limitation period.
So, and do you see any changes that has to be done in the case of refunds, but either in the law or in the rules or in the procedure being followed?
In my view, number one thing is with regard to capital goods, the refund should be incorporated in the system. Number one is that, which is something which is very important. Second, this LUT is merely a process which is not required, because this letter of undertaking, whether I submit it or not, is a very simple process which I can do online. Whether I submit it or not submit it does not matter. In every case, export without payment of tax, I should get a refund. And it is not like an approval which is required for LUT. So as it is, this only is a hassle for every assessee. Next, in the department, there should be a very clear SOP as to what they can check and what they cannot check. Though the circular is providing what the assessee should be doing, it does not actually provide what the department is actually required to check, and they cannot go beyond that. As a result of which, department is performing the entire scrutiny as they would perform for any person while, let's say, doing a search, seizure, or investigation. Those kind of proceedings should not be performed for giving a simple refund. So there is no standard procedure which is there in the department for this. This is something which they can probably incorporate. So these are something which maybe they can think of.
Yeah, because if I go to the same jurisdiction officer for a case, and they're asking for the documents in a different set of documents, and the same person, if he changes and another person comes, he asks for a different set of documents. And
correct.
And that too, with respect to SEZ refund, the certificate from the specified officer or now the authorized, even that is also becoming a big nightmare for the suppliers to obtain that, because earlier in 2017 and all, there is now in 2B, I can see now that there are some import of goods, means if they show under import of goods, and because earlier they used to show under all other ITC, so there is issue in the 3B also. So and I saw many cases which are being asked, which are being questioned, that whether those things are actually SEZ supplies or not, and also what is your view on the office certificate from the specified officer in case of SEZ refund?
See, the problem is this was not implemented properly. The idea is absolutely correct, because unless you have a stamp from the officers, there is no way to identify the supply has been for authorized operation in SEZ. Somebody might raise simply an invoice and get a refund of that, which may cause a fraud. So ideally that when it is cleared for authorized operation, there is a centralized system where you can check that, and there is a stamp which is put there. If we don't get the stamp from the specified officer, in that case, ideally the refund should not be granted. But the problem is it was not implemented. Ideally, rather than asking for a certificate now, only simply if had the stamp been put properly and it would have been uploaded properly, this issue would not have arisen.
Yeah, because recent times I could see that invoices from SEZ units, means SEZ units are being popped up in SEZ India online. We could check that using our GSTN. So thank you so much for answering all the queries also. And I should appreciate your preparation for the same. And also the questions are some questions are from the participants and some are from my side. So I have to appreciate you for all the answers that are being made. And again, I thank you so much for taking the efforts in preparation also.
And thank you so much, Vinayji. You put in your efforts for putting all these questions, which were all very interesting, and you took the trouble of understanding which are the most frequently asked questions. So, and participating in the discussion with you has made this seminar very interactive and in fact very interesting for me also. Thank you.
Good afternoon, everyone. Thank you. Thank you. I'm happy to share that we from the Student Skill Enrichment Board is organizing the live webinars on practical training module for our CA students. This is our 14th webinar and we will meet you every Sunday at 10:30 morning sharp. Thanks to our Honorable Chairman Sir CA Sushil Kumar Goyal ji and our respected Vice Chairman Sir CA Mupala ji for organizing such a wonderful session and motivating the office. Also to our today's keynote speaker, CA Sanjeev Singhal ji, for sharing his vast knowledge and helping the students and contributing to the society at large. I would also like to express my gratitude to our eminent speakers, CA Shubham Khetanji and CA Vinay Gandhiji, for their contribution to make this webinar a great success. It is such an honor for us, sir, to get an opportunity to have you all with us. On behalf of the Student Skill Enrichment Board, I extend a warm welcome to our students also who are present here and those who will get the opportunity in the future to learn from our recorded versions. I may like to express our thanks to Shubham ji, especially for giving the excellent coverage and insight into the topic of GST refund. So, sir, you are really helped in enhancing the knowledge of the student, and we have really motivated with your words. So, thanks for such a webinar and focusing us. I congratulate all the participants who have actively participated. Thank you, everyone, once again for making it a grand success. Thank you.